Bring in our market experts, Bob Froelich of DWS Investments, Peter Schiff, Euro Pacific Capital, Jim Lacamp, RBC Wealth Management. Gentlemen, one of the amazing things today, in a terrible down day, where all the cyclicals, Jim, all the pro-growth cyclical sectors, which had been performing well off the November 20 bottom, they got slammed again, plus the financials. But we're talking about retailers, commodities, tech, industrials, energy. Now, Jimmy, construction and engineering. All right, Obama spends 2 paragraphs today talking about his infrastructure play. They got killed. They got slaughtered. They were down 8% today, and they're now down 13% from the peak. And let me walk through this. Shaw Group off 13%, URS off 9%, Jacobs off 9%, Fluor off 7%. Now, we all on Wall Street, or all Wall Street, I don't like the word we, was counting on the construction infrastructure play. This getting clobbered right now. Why is that?
There's 2 reasons. Wall Street's saying loud and clear they do not like the new plans coming in. And if Wall Street says it loud and clear, he may have a harder time selling these plans. There's a lot of money involved, and a lot of Democrats have expressed displeasure with the size of this plan. Beyond that, Larry, there's $150 billion in hedge fund redemptions that occurred last month. I think there's still a tremendous amount of forced sales going on Wall Street.
Why are they selling infrastructure stocks? Why are they selling infrastructure? Look, I happen to think that the infrastructure program is vastly overrated. Government resource transfers do not create new jobs and wealth, at least in the long run. But everybody was convinced on Wall Street, everybody was convinced that infrastructure was the place to be. Now it's getting slammed. I'm trying to find out why. Why?
The rumors Wall Street is saying they don't like the plans. Wall Street's saying very loud and clear they don't like the plans. And a lot of Democrats are saying, well, wait a minute, that really is too much money. So there's this growing concern that he's going to have a hard time selling these plans.
They're going to pour more money. You know what, Peter Schiff, Obama didn't even talk about his faux tax cuts today, Peter. Figure that out. Well, and he had some class warfare specials about well-to-do people, prosperous people. Heaven forbid we should have rich people in this economy who are getting killed in this downturn anyway. That couldn't have been good.
Well, you know, the interesting part about his speech, he talks about shared sacrifice or rolling up our sleeves and getting back to work. But if you look at the meat of his economic program, it's to get more credit to consumers so they can borrow and spend more money. How is that sacrifice? How is going to the mall and buying more stuff that you can't afford, how is that asking for sacrifice?
We're going to come back. We're going to lose Mr. Lacamp. Mr. Lacamp, big bear that you are, what's your favorite? What do you do right now? We're going to lose you to technology or something, aerospace. What do you do here?
You got to stick with bonds right now. The bondholders are going to get paid before the stockholders do. They're senior to it, and at least you get paid while you wait. The corporate bonds and municipal bonds are providing much better value right now than the stock market, so that's where you need to be.
Do these preferred shares owned by the government come before or after the bonds of these banking companies?
The bonds are senior to the preferred.
Right. No, the bonds are senior to the preferred, so that's why you wanted people to buy them. But do you think these banks are going to stay solvent? Are you talking, would you actually buy Citigroup bonds? Would you buy Bank of America bonds right now, Jim Lacamp?
I think you can just find better value elsewhere. I have been looking at some of these financial preferreds and these TARP preferreds, but I think you can find better value elsewhere, particularly in the municipal market.
All right, municipal bonds. Jim Lacamp, thank you, buddy. We'll see you later on in the week.